This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 2nd, 2015. So the euro is in the process of consolidating off recent 11-year lows set last Monday at 10.98, and the question now is whether the market will look for more of a correction to allow for shorter and medium-term technical studies to unwind, or if we're going to see a more immediate bearish resumption. A break back above previous support at 14.60 would open the door for a more significant correction, while back below 10.98 would confirm bearish resumption and expose 110 further down. Ultimately, the downtrend remains firmly intact while the market remains below the 50-day moving average. Sterling dollar. Cable is locked within a consolidation off recent 2015 lows at 149.51, which also happened to be multi-month lows. A break below 49.51 would expose the 2013 base at 48.13 further down, while back above 52.70 would take the immediate pressure off the downside and open the door for a more significant correction up towards previous support at 154.85. Dollar yen. Dollar yen isn't doing much at the moment and has been locked in a multi-day, multi-week consolidation since posting fresh 7-year highs at 121.85 in December. But overall, the uptrend remains firmly intact, and this consolidation is expected to be broken to the upside with a push above 121.85, exposing 125 further up. Ultimately, only back below 115.55 would delay the immediate bullish structure. Euro Swiss. Euro Swiss has recently broken out of a range between 102.50 and 97.10, with the break above 102.50 exposing a move towards the measured move objective at 107 further up. Look for the market to trade towards 107 over the coming sessions, while only back below parity would compromise the current bullish outlook. Aussie dollar. Aussie dollar has recently broken down towards a measured move objective at 77 after roughly consolidating between 80 and 83 for several sessions. Now the overall downtrend remains firmly intact, but there is risk for a bit of an unwinding of oversold technical readings to allow for a fresh lower top ahead of the next bearish resumption. Ultimately, previous psychological barriers at 80 should now act as a resistance point. Dollar CAD. Dollar CAD refuses to back down despite severely overbought technical readings, with the market trading up towards 6-year highs and now focused on a retest of the 2009 high at 130.65. But again, daily studies are severely overextended, and there is risk over the coming sessions for a short-term pullback to allow for these technical studies to unwind from overbought readings. Weekly and monthly studies are also overbought. A break back below 126.08 would, however, be required to trigger the onset of a correction and open the door for a move towards the 10-day moving average. Kiwi dollar. Kiwi dollar is broken down and trades down towards its measured move objective after a consolidation of 400 points between 76 and 80. The measured move objective has now been basically reached, and there is risk for a short-term bounce to allow for technical studies to unwind from oversold readings. But ultimately, a lower top is sought out ahead of a bearish resumption, with any rallies seen very well capped ahead of the previous support at 76. SPX 500. The S&P 500 continues to show signs of the formation of a major top, with a break below 1968 to confirm. That's the low that we saw on the 16th of December, and a break below would open the door and expose a retest of the October base at 1820 further down. Ultimately, only back above the 2070 area would compromise this newly adopted bearish outlook. Gold. Gold is in the process of consolidating over recent resistance at 1256. The market had broken above 1256 several weeks back to confirm the potential onset of a significant base, and latest setbacks have been supported by this previous resistance, and the market is now looking for a move towards the next key resistance point, which comes in by the July 2014 high at 1345 further up.